Actually, we do have a question from Marcus. It's directed to you, Rasti. So I'll ask you the question, and then you other guys want to make some comments. That'd be great. Marcus writes, Rasti, with rates as high as they are, is what you guys are talking about. Should I be looking at high yield or high growth in residential properties? What's your advice on that, Rasti?
Great question. So first of all, I'll say that property investing should be done for the capital growth reasons, because this is a growth asset as a fundamental level, as asset class of residential property market. This is a growth asset. Just like why we should be investing in share market, it's not for the dividend sake, it's more for the capital growth that the value increases over the period of time. But having said that, we are really talking about an asset class against which we are doing a leverage or taking borrowing, and the cost of borrowing is there for one to be mindful of, and the cash flow implications. So I would be saying that we should be, as much as possible, should be tilting towards capital growth, but then the subjective nature of the household expenses or the balance sheet should come into play, that how much they can afford to buy for the capital growth, because the cash flow, the holding cost is also meaningful and should be considered. So brief answer, buy for capital growth, but not to the extent that it becomes or makes a hole in the pocket that it's hard to get like a long-term investing.
Very good.